Good morning and welcome to Trading with Larry. It's Larry Benedict, joined by Eric Shamalov. Good morning, Eric. How are you?
Good morning, Larry. Looking dapper this morning.
Yeah, I had to get dressed up for the podcast today. No, I'm only kidding. I have somewhere I have to go. So I'm out of uniform, out of trading uniform, and into real world uniform for a little while today, and maybe back into trading uniform later. But markets are up again. They were down yesterday about 60 handles, which felt like a crash again. VIX was popping 10% in the morning, and then the I don't know if you call them. We used to call them the Plunge Protection team or whoever came in and thought that was too much and did the same thing they do pretty much every day. And here we sit, and and for you know, second day of December trading, and there's probably only 10 real trading days left, maybe a little bit more than that in the year. So pretty much the S&P up about 16 for the year. Um, I don't know if it's going to close up 14 or 18 or 19 or whatever, but probably not too far from here. I'm hoping we get a little bit of a sell-off, but if the sell-off doesn't come now, it may come out of the gates in January when nobody has positive P&L. And again, a lot of the stocks that are the high flyers are not flying all that high. And we had one of those days yesterday. We talked about it a little on the podcast about how if Nvidia is down, you got to look for what's up. And yesterday, Google was down, so they reversed Nvidia, and Nvidia was up yesterday after being down. And it's amazing they take $200 billion of market cap in and out of Nvidia on a daily basis like it's water, which is the value of probably 400 plus stocks in the S&P 500 comes in and out of Nvidia almost daily, which is pretty amazing if you think about it. And it's all of this stuff is tied to algos and all of that. And today the market's up pretty much 18 S&P points coming in. Last night it was up and down overnight. This morning woke up, it was up about 8, and then it ran up 17 or 20, and now it's back, up about 20. Um, Gold sold off, from the highs about a little over 50. Um, Again, I think lower there. But again, I don't see much going on. And I think the opportunity here, and for people that don't have an options account, it's a little bit harder to do, obviously. But I think, the opportunity here is to utilize options even at a 17, 18 volatility, which is inherently high over time, to maybe put on positions that you're utilizing positive premium decay as we come into the end of the year. Now, you remember, if we have a bad tweet or some kind of fake news that comes out, you can really get hurt. That's why I always recommend doing put and call spreads, not naked options. So at least you're hedged and you have defined risk. I think that's a good strategy. The market may go a little bit higher here, but I feel like we're pretty capped. NASDAQ, again, is made up of 5 stocks. So you got to keep an eye on which one's moving. Today I want to short some Nvidia, but I don't want to short the common stock. I want to short like a call spread out of the market, like maybe an 85.90 or 87 and a half, 92 call spread for Friday. Gives you protection up another 3.5, 4% there. And I kind of think Nvidia to me looks heavy. But the problem is it can look heavy and then all of a sudden it doesn't look heavy anymore. So, I'm seeing that, you know, oil held up yesterday, $59 a barrel. Um, I like it better in the 57 handle. Don't think it's going to get much above 60. We have the Trump, top where he, they don't want the market higher, so they'll do anything they can to try to keep the market in check or going lower. So right now, still a no trade in oil. If it breaks down into the 57 handle, I like it as a long above 60 and change, like it is a short, but not a lot going on there. Hasn't been in a while. You have a little bit of mantra in silver coming in a little. Silver has an inherent bid. It's funny. I was reading an article. I didn't even realize this. They call it the devil's metal. What does that mean? It's the devil's metal. I don't know. I was reading an article. They call it the devil's metal. So I don't.
Interesting.
Yeah, we got to have somebody write in about why it's called the devil's metal or whatever. But that's what they were calling it in this article. Um, Probably from older times. In the market now, it's the AI metal. It's used for everything data center related, and to me, looking at the market from the outside, and usually I have positions that you know sort of jade my opinion, but right now I'm really kind of light and very neutral, and I'm just looking at the market, and I'm just not understanding how they can continue to do this, Eric, where they just sneak the market up. It doesn't move a lot. And really, we've been in here for a while. We're back pushing, near all time highs, but it's just taken so long. And literally, if you look back a week and a half ago, we were at 65 and change in the S&P. Heading, we were only up 11% for the year. So the question that I have for you is, can they push back down at the end of the year with some profit taking? Um, or are we going to be in here or a little bit higher at year end? I mean, there's still, a bunch of trading days to go, but it's just a handful of trading days. So you got to be, a little bit leery. I think the upside is fairly capped. I'm a little, I've been selling some put spreads today, and I'm a little bit leery of these put spreads, and they're pretty far out of the money. They're almost 1% out of the money. You know, and the question is like, how are we going down 1%? Maybe there's news. What do you think? Like, what's going on? Where's the Supreme Court? That's the one I don't understand. Where are they? Where are they?
Dude, that's like 3 weeks ago. You know how the news cycle works. Come on.
I understand that, but when they got to make a ruling, they got to what? They're not going to rule because the ruling's bad. They're waiting. They're waiting to write an opinion for months. I mean, come on, this is crazy. What if the Supreme Court was reversing somebody's death sentence? They don't wait months. They do it in days. So this is like been put on the back burner by Trump and company because the ruling is minimally going to not be favorable for tariffs. And what's interesting also, if we talk about it, I haven't heard anything about tariffs. Where are all the great trade deals? Remember, he was doing all these trade. He was signing this one and that one and this one, and once again, there's nothing. And then when the market goes down, they come up with a fake trade deal. So right now we're just sitting. Market's near the high.
You have everybody thinking about why they call silver the devil's metal. So
Yeah, I
without
don't
looking,
know. I got to look it up.
nobody could cheat on the chat. Nobody could cheat. Don't cheat and look it up.
No, I don't know why. I don't know why. And it was just in this article. Maybe some guy called it that. I don't know. But here we sit,
The
and
chat is thinking it's because of volatility, and I'm just saying that's the obvious answer.
I
You
don't
know,
think so. Maybe maybe it's blown people out. But if you take this little period of time in metals, which is like the last 3.5 years or so, like metals have been garbage for 20 years. I mean, little garbage. But right now they're hot. Um, I'm wondering if it could do a Bitcoin kind of trade. I mean, it's up 60% for the year. Could it do a Bitcoin kind of trade?
no, I don't think so. I think in fact,
Why? We went down. Stop. We went down 13% in 2 days. You told me retail sold in 3 days. They got out.
So
Retail never got out of that trade. I'm just letting you know. They never, ever, ever got out of that trade.
all right, show me the data, boy. Show me the data. But
I'm
I
not
think
worried about the data.
commodities are a little bit.
I don't know what data you're looking at and how they know who it is in retail. Like,
I'm just
what does it have a big R next
things
to
are-
it? Like, why is that? How would you determine whether my account is retail or professional? How are you determining that?
I'm just look. I'm looking at fund flows, and before gold went up to all time highs at 40. What was it? 4,400. Gold started permeating the headlines, and it got a lot of retail. It had a lot of. It was like retail started really paying attention to it. Like it all came together. Then you started to see the fund flows rip like crazy, uh, day in and day out. And yeah, it was retail. You
Yeah, but
had
why
every.
would they? I'm not understanding. You have to agree with this. Bitcoin went down 37% from high to low, maybe a little bit more, which is a crash. Retail never sold. They never sold until a week ago. Never made a sale. Then they puked for a week. Okay. And then yesterday in Bitcoin, which was a great trading
I know
day.
what you're saying. Like, why would they? Why would they do that to gold? I don't know. I think it's just the psychological part of gold. They. I feel like they never like the conversation I have with retail traders. They were never interested in gold. Like I've been
I
telling
understand,
them
but they're not selling gold out in 4 trading
for
days. They're not selling gold out in 4 trading days. If they bought
years.
gold,
It took a
why would they
couple.
sell it
You
out in
saw
four
you saw
trading
that
days?
you just saw the inflows come in, and you saw them come right back out.
I understand, but that inflow in could be retail and the outflow could be institutional, professional, large traders, manufacturers, hedgers. You don't really know who that out is, but I can't imagine retail selling in 3, 4 days. I just can't imagine it. It doesn't even make any sense.
You
They never
think
sell anything ever, Eric, ever. If Nvidia went to 140 right now, no retail traders or people that are holding this would make a sale. They would cry and complain, but they would not make a sale. Come on, you know that. And listen, what is coming?
what's the point? Okay, so let's say that they're. So you're saying they're still in, which I disagree with.
Okay.
But let's say they are still in. What's the point? What is your point?
There is no point. The point is that retail never sells. That's the point that I'm trying to bring out. I want to talk about Bitcoin because that's a prime example. We watched
Before you
it every
do, I have
day.
a headline for you, just for you. I dug it up. I thought you would really enjoy it. Here you go. This one's just for you. Jane Street, Citadel, on record pace for revenue.
Yeah, how much?
It's
That's
like,
what they're stealing on every trade.
there you go. When I saw this, I knew I had to put it up just for you.
Yeah, well, listen, that's the mantra of the market. Um, and as long as the market contains volatility between 12 and 17, these guys are going to have record profits every single year because, like I said, I pay a toll to trade every day. Every day I pay a toll. It's just part of what I do. You know, if Thomas behind me is executing an order for me, which he does many a day, every time we trade, we're giving it up to Citadel or Jane Street or whoever that sees our order coming from a mile away. I don't really want to get on that tangent, because
So
we
you
talk
really
about.
think that the market is up the way it's up this year because of Jane Street and Citadel kind of
No,
bringing?
I think the market is up this year because of retail or, I don't know if you'd even call it. I call it semi, I wouldn't call it institutional, but I wouldn't call it retail. In between retail and institutional, like, people that are trading out of their house and whatever. And basically, as long, dude, it's the game of musical chairs. As long as there's a chair to sit in, everybody's fine, right? The music's going round and round, and when the music stops, there's plenty of chairs. Everyone's able to sit until when there's two chairs left, and it's three people, and it's a big problem. And we've seen that problem many times. So yes, I do think that retail is the anatomy of this trade is very interesting. So you have people that want to buy the market, but they're not real. They're paper tigers. They're buyers as long as the market's going higher. I've seen it 4 times alone in Palantir this year when the stock got down to 140. And my friend's calling me up saying it's going to 40. I'm freaking out. What do I do? Da 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 da. And I've never gotten another phone call from the guy. So yes, I think it's a paper tiger market, meaning the retail or high level retail. I wouldn't call it retail, although it is. That's not, I call retail somebody that's buying stocks that it's not their primary job. Okay. So my friend owns a mortgage business. He's buying every stock under the sun. Another guy's a chiropractor. So those guys are retail, but they're high end retail. They're worth 8, 9 figures, and they're punting around in stocks with outsized positions. So yes, I think retail is pushing up the market. And as long as you're up money in Nvidia, you can buy more, right? You're never going to sell it. Who's going to sell Nvidia? Tell me who's going to sell it on retail or high end retail. Who's going to sell it?
I don't know, man. It's your theory, not mine. You tell me.
Well, what do you mean you don't know? Eric, listen to me. I've seen this firsthand. The stock is 110. They buy it. They say, well, if it gets to 130, which is a huge move, it's a 20% move. It's an incredible move, right? It goes up $20, $30. I'm going to sell it. Guess what happens when it gets there? What do you think happens?
I don't know. Tell me.
Dude,
Tell us.
you're literally asleep today, bro. Do I have to run this whole thing myself? What
You
what happens is they don't sell it. They say, "Oh, it's 130. Oh, no, 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 I'm going to sell 150." Then it gets to 150. I call the guy. I go, Joe, are you getting out of this thing? No, man, it's going to 170. Then it goes to 170. I'm like, dude, are you getting out of this thing? No, I'm not getting out of this thing. Then it goes to 190. Hey, Joey, are you selling this thing? No, I'm waiting for 190. It gets to 190. They don't sell it. And then guess what happens when it goes back to 150, Eric? What happens? They freak out. Holy cow, what do I do? How do I hedge? How do I use options to hedge? And now right now they're sitting very quietly because everything is fine. And listen, I've seen this movie a million times in trading over the last 40 years. I've seen it. I've seen these same culprits who are very successful business people blow up in the stock market. Literally blow up. 2008 complete blow up. Beginning of COVID, complete blow up. Basically, every correction that we've ever had of more than 20%, people are hammered because these stocks go down more than 20%. That's the broad market. These stocks can go down 40, 50, 60%. We've seen it over time. So, yes, I mean, right now, no one's selling. No one wants to pay. My favorite one is no one wants to pay taxes. They don't want to sell because they don't want to pay taxes. When I ran my hedge fund, I wanted to pay as much tax as I could. That means I was crushing it, right? No one wants to pay taxes. And the funny thing is, the taxes are capital gains. So, they're not regular income tax. It's very light taxes. So, I don't know if that's an excuse, but, we're in this mantra right now where no one wants to sell. They panic when we go down. Listen, why would volatility, let me ask you this question. Why would volatility go to 26, not last week, the week before? Why would it go to 26 with the S&P 2.5% from an all-time high? Tell me why.
Yeah, I think it's a transition from being underhedged to being kind of like overhedged.
Well, I don't think they get overhedged. They're trying to get on a hedge, okay? And they don't care what they
They
pay.
burn and then they become overhedged.
Well, I don't think they're overhedged. How are they overhedged? How do they get overhedged?
People run into protection.
I
And
understand, but you're not overhedged. If you have a book and you have, $80 million in long, you buy X amount of options to cover that. Bottom line is you hope those options go to zero. That's why, like not last week, the week before, like today is Tuesday, right? Friday option 6200s with the index at 6600, okay? Which is basically 10% lower than the market, we're bid to the moon. I don't know how that's protecting anybody, but now we're in a new week and nobody wants any protection. None. Zero. It's the opposite. No protection now. They want to just, they're hoping they get paid at the end of the year. And it's funny, like, it's kind of weird in a way at the end of the year. It's easy to do to manipulate the market higher. And then what happens is hedge fund managers get paid off the mark to market at the end of the year. So they don't want to sell off. The retail doesn't want to sell off. So here we sit. So the question is, are we going to get something to shake the tree before the end of the year? Or is the end of the year in? And really, what do we have left? 13 trading days? How many trading days are left? I'd love to know. I,
I
and
mean,
I wouldn't.
we have the Fed obviously next week, and I don't know what surprise we're going to have, but the rate cut is the probability is at 100% right now.
Wow, that to me, nothing should be 100%. Never have I traded with something being 100% certainty when it might be 97. Why wouldn't you sell as many up 100% as you could? What can you lose? You can't lose anything. And then my
Literally,
better my better question to you, because you're long bonds supposedly. I don't know if you sold them yet. They're now at 411. Okay. They're going to be 415, maybe even higher, potentially by the time the Fed cuts rates. And it could be a very big backfire because I think if they do cut rates, they're basically going to signal the market they're fully at a neutral stance. Okay. Which is not very positive, right? And the question is, ask yourself this. Fed always says they're waiting on data, they're waiting, they got to see the data. They haven't seen any data. So how are they making these outrageous cuts with a record high stock market with no data? Doesn't
yeah,
that
it's a little 100% strange. Not sure why they need to cut, but it looks like they are based
I know,
on.
but why? Why? Because the guy's afraid. I mean, he's leaving his job. Why doesn't he not cut? Keep the bullet in his pocket. And I actually think the market would go high. It may initially go a little bit lower, but then would go higher because they'd say, "Oh, the Fed's going to cut at the next meeting." Like it's I don't know. You got to look a little bit forward, but really, the year is in the books. Pretty.
Speaking of rates, like our U.S. rates have gone up over the last couple of trading sessions. Like, what do you think? That you think it's the situation in Japan where you have yields up, everybody's worried about this broken Japanese carry trade. That's something that could upend the market before year end. So, what do you think of that? I'm looking at the rate move, and I'm just thinking it might be because of Japan and nothing else. And if that's the case, maybe bonds are a good buy right here. But
Good.
Japan,
I
we
do
said,
not like bonds here. To be fully clear, I haven't liked them. Okay, you like them. I don't like them. I think there's, what do they call it, a conundrum in the market because I think if the Fed does cut, which you're saying is 100% probability, that's a big problem. I mean, and then they're going to go to neutral. That's going to put us with no bullets left in the chamber. And it's interesting. Rates around the world are significantly higher. Like, listen, I think an interesting trade is to
when you
buy.
say go to neutral, you're saying that they're going to cut more early next year.
No, I said they're going to go to neutral. They're going to cut zero next year.
Oh,
Okay.
okay. Yeah.
They're going to basically use the cut now. I don't even know why they are, but here's a better one. Look at rates in Europe. Like the UK is at 4.5 on a 10 year and basically 520 on a 30 year. 520. That's where I would go. I wouldn't go to Germany. They're 2.5%. They're low in general, but UK to me seems, and you don't, I mean, you have a little currency risk, but not a lot. I mean, those rates are freaking sky high. And the better question that you got to ask yourself is how can rates come down here? in the United States if they're going up pretty much everywhere in the world? Doesn't matter. Like, you're telling me stock market's rallying because the Fed's cutting. I mean, the Fed's always cutting. The Fed has cut
I think
three
it's part of
times.
it. I think it's definitely part of it. But you could just see that with uh, you could see the trajectory of the market moving up and down over the last couple of weeks with Fed rate expectations. It's been
Nah,
pretty.
I don't listen. That data is just data. You're saying it's 100.
That is, they're
I don't
moving to.
understand how it could it be 100%. I wanna put tell me how I can put a trade on that goes against that because I would bet the farm. Okay. How are you gonna unless there's something with Fed funds and sort of the way they trade that it could go to significantly more than 100%. But I mean, you know, it just doesn't, I don't buy it. And the data that we're getting, like yesterday's data, it's like all this data that's coming is like garbage. You don't think it's garbage? We have so much data today that it's literally unbelievable. I mean, it's crazy. There's so much data coming out that's meaningless. PPI. What are you going to do with PPI or CPI? You think it's even real?
I don't know. You mentioned PPI. I just remember earlier in the year, we had like the producer price index come in higher than the consumer price index. I remember everyone making a big fuss about that. Like, okay, inflation is coming because these companies are eating the cost. They're going to pass that through. And look, I was on that bandwagon, and we just haven't seen it in the CPI at all. So,
Well, I would tell you, I'm getting texts from someone I used to trade with that is actually watching the show, and he said Fed fund futures are not 100%. They're 87.4% cut, 12.6% no cut. That's the market. So I couldn't imagine it could be 100%. It makes that actually makes no
I
sense.
don't know. It's right now. It's saying 96%. Yesterday, it was
I don't know
at
if you're looking at the Fed fund futures. I don't know what you're looking at. I don't.
the
The
Fed
Fed
funds
fund
swap. Yeah.
Fed funds futures. I mean, I rely on this guy. Okay, I've traded with him. He's saying 87.4, 12.6.
Okay, what the hell is
But
the
it makes
difference?
but it makes
So,
it
I
makes
mean,
more sense, Eric. It makes more sense. I mean,
here's
why
what I'm looking
nothing
at here.
nothing should be 100%. How could anything be 100%?
You see this number, 96%? You see that?
No,
That's what that
actually,
is,
I can't see it.
right there. 96% probability.
I I don't know. I don't know what you're looking at, and I can't. I need glasses to
Looking at the Fed funds swap table that we look at all the time.
Okay, so that's not 100%. Okay. So, you know, I'm
Okay,
going with 87. I'm going with my guy. I'm going with my guy.
99.
I'm going with my guy. Okay. So, you know,
Okay.
we'll see. But either way, I mean that's just moot whether it's 87 or 99 or 95. It's a high probability of a cut. Um, I don't understand it, but it is what it is, and here we sit, and we'll see. We'll see what happens today in the markets. I can't sell any more puts. I've sold so many puts, for today. Put spreads. It's ludicrous what's going on here in the markets. I
You,
mean,
you you mentioned like utilizing options. Like this is a very good time for that. I actually see that. I put on an interesting position late
uh
last night.
oh,
What
uh-oh.
was it?
I said,
Oh,
uh-oh.
yeah. So like we talk about iron condors a lot. So we when we talk about them, we talk about them like out of the money. So like wrapping it around, you sell call spreads way above, you sell put spreads way below 30, 40, 50 points, depending on the situation. And that's a defined risk trade. You're hoping the market kind of stays in a range. Yesterday, while as the market is down, I'm kind of down overnight a little bit, right? After being down yesterday, I'm looking at the market and I was able to price in the money iron condor. So the market is down. I'm thinking, okay, we get like a maybe 35-point up move. What could I put on? I don't want to just buy calls. I want to have more of a structured position. So I put on an in the money iron condor. So that's an in the money put spread with a out of the money call spread on top of that. On a 10-point spread, I was able to get 925. So that's basically risking 75 cents per contract. What do you think about those? Do you ever trade those? What do you think about them?
I don't really. I like to do ratio spreads, 1x2s, 1x2.5s. You know, that's where I live for the most part. Listen, I haven't loved the Iron Condor. I still don't love it. Um, I just think the movement is too much. Like I have a 1x2 on today in calls, and I think I'm going to be all right, but I'm not. I'm not sure. I'm not really sure.
But
Um,
that's a position like I'm very like I would be more comfortable scaling up. Like the risk there is just 75 cents. You as it if it hits, it's like a very big winner, right? So there's like and you could like do a lot of things around that with just 75 cents of risk. So yeah, I've been utilizing those in the money iron condors a lot recently. The
no,
one
that's
by twos also, I have an interesting position in Tesla. So I'm actually bullish on Tesla, right? But what I did was I did a 1 by 3 by 1, and last week was actually able to get a credit for that, even though I'm bullish on it. So if I'm wrong on the stock, I'm going to get
yeah,
paid.
but why are you doing a 1x3? Your gamma at the strike with three is so much, and then on the back end you only have one as a hedge, which leaves you naked. So what I like on a spread like that is a 1x3 by 2. Okay, this way at least you're covered, and even if you have to spend a little bit of money to get that coverage, it's worth the money. You have too much gamma. You're going to be short two nakeds all the way up until you get to your next strike, and God forbid you get to your next one strike, you're going to be down a lot of money, and now you're going to have a naked all the way up. I don't really like that. I always put
But
you
check
know
this out. It's a 475. That's your one. You're long the call. 495. I'm short three of those, right? And then I'm long one at 515 just to cap it. I'm thinking, look, if it gets
but you're
there,
not capping it. Time out. If you were capping it, you'd have two.
right?
So
I'm not
you're not
capping it.
capping it. Well,
I'm putting
what
five.
happens if we get to 520? You're dead.
We get to 520 on an overnight, like on a gap up. Yeah, I'm screwed on that position. But I don't think that I'm assuming
Dude,
that I'm.
listen, one thing I'll tell our viewers here, I'm an index trader first and foremost. And a lot of the reason why is I was originally an equity trader, always. Okay. But to do these strategies in individual equities is extremely, extremely more risky, extremely more risky. So, you got takeover risk, you got bad news risk, you got good news risk. To move an entire market 5% in a day is pretty hard to do. Tesla moving 5% in a day can happen any day of the week, you know, or any stock for that matter, and we've seen, so for me, I do them in equities. Never do them uncapped ever, meaning never do it 1 by 3 by 1. I would do it 1 by 3 by 1, and you could do it 1 by 3 by 1 and buy the 530 calls just in case. You know what I'm saying? Which are rip ups, and that strategy is not a bad strategy. You're looking to middle the stock. You own the front 75s for basically free, right? You're not
I
paying really money for
get
that.
paid for it, right? Because of the 1 by 3.
Right, but dude, you're getting a credit for it because you can get your head blown off.
I understand.
Okay,
That would be
so
quite a
you
move
know,
up to 495 by December 16th. I'm hoping. I'm actually.
Dude, we've seen Tesla move $100 in a day. Okay, so I'm not even, you know,
Now I'm actually bullish on it, so I'm thinking, but I just don't think it'll go that far,
I
right?
just
And
think
if
you have a
if it
lot of time on that spread. Too much time. It's a lot of days. I don't know. I mean, listen, it's as good as anything. The only thing I would do in reviewing that position for people that are watching is don't sell naked. Any options. No reason. You know how many times a BS option has saved my life? A lot. Okay. It wasn't a good day when it saves your life. Okay. But it saves your life. And meaning, not really your life, but your P&L life. So, I like to be kind of capped up on that risk and exposure. And, you know, here we sit, S&P at 6850. Um, Markets are extremely calm. And I'm going to call it a setup day. Basically, probably, yesterday we had, whenever we're down, they rally back. Whenever we're up, they never sell them off. Maybe we get a little sell off later or something. I don't know. But right now, S&P is up 20 handles on legitimately air, on near the high ticks of the day. And here we sit. Um, and I don't know. Again, I think,
by the way, straddles at 28.
yeah, well, it's probably too high, actually.
Yesterday, you were like the straddle. I would not be I would not be what'd you say, a seller of that straddle. Like you thought we'd get a big move. I also thought we'd get more of a big move. It was at 35 before the open. We kind of yesterday was a good iron condor day. All right,
I
today
don't know. No day is a good iron condor day in my mind. Okay, yeah, you may get lucky and get out of it, but there is not, dude. I've done these things for the last 40 years. Okay, and successfully. And it doesn't feel like this. You know, Usually, you're selling. Like yesterday, think about this. The cash S&P was basically right around here, and then the market sold off $35 at the end of the day out of air. You know, so we're right back where we were, but we sold off $35 at the end of the day. And you're saying like Iron Condor is good, but when we were on the top side of that range, it wasn't good, dude. It wasn't feeling good. Um, you know, if the move was up rather than down at the end of the day, you get wiped. So I don't feel that comfortable on a $6,800 instrument, that $6,800 instrument selling a $20 straddle or a $28 straddle.
yeah, those I yeah
I'm just saying it's dangerous.
yeah.
Listen, we could walk out of here today, making money on that for sure. I mean, for sure. I mean, I think the market is over. Listen, yesterday was a slight down day, slight, right? But before that, we were up 5 straight days in a row of 50, 60, 110, 50. They've already rallied extensively. Dude, they've rallied 250 SPU points without a pullback in 5 trading days on air.
I think it was even more. I think it was closer to 300.
Was it? Yeah,
Yeah,
maybe it was. Maybe, whatever. 250, 280 on air, dude. It's air. There's nobody here. It's air. There's no news. There's nothing decisive. Um, you know,
maybe they were front running the end of quantitative tightening, which was yesterday.
I don't know. I don't know. You think there's quantitative easing and that the Fed is buying stocks? Dude, it's just
The Fed is buying what?
stocks, like in your mind. They're pumping money into banks, and then banks are buying stocks. I mean, dude, you have every reason. Let me just tell you this: I can't wait to flip the calendar to where no one's up money coming into next year, and we get real trading. And I want to see you in real volatility, dog. That's what I want
You've
to
seen
see.
me in real volatility all year. What are you talking about?
Dude,
We didn't have volatility this year.
we've had a little volatility.
Little.
We had volatility up
This
till
year was a
April.
crazy year. We went in and out of regimes. Okay, this year, like if
What
you're
does that
writing
mean, in and out
text
of
about
regimes?
regime changes,
What does that mean, in and out of regimes? What
we
regime?
we had two volatility regimes. We had one in April and March with
Timeout. Let's back up because we're getting close to the end of the year. Let's talk about April for a second. Dude, if you closed your eyes for a week and a half, April never happened. Okay, just so you know. And actually, April ended as an up month.
right,
As an up month. Up
right.
month. Okay, so literally that was a 2 week BS mini
That's
crash.
what I mean. In and out of regimes several times this year. I think it was a very volatile year. So
Really? I
yeah, you
dude,
didn't
this market,
notice the
listen,
crazy moves this year. I'm sure you did. How'd you do this year?
May flat so far. Just, for me, I guess that's good because the bottom line is I'm bearish out of my mind. And, if I end the year up money, which is likely to happen, I'll be happy about that. And then I think next year could be one of my biggest years that I've ever had because, you're going into year 4 of insanity with a lot of cross currents and a lot of stuff going on. And, all of the mantra that the stock market rallied on, Eric, never, it's very funny, never came to big. Think about it. We rallied off the bottom, okay, off the tariff. Then all of a sudden the tariffs were on, then they're off, then they're on, then they're off. And really, if you look at the real world, they're off. Okay. They're tariffing at some level, but there's no deals in place. Okay. No one's signing a deal. The big guy is China, right? We've flown all around the world to meet up with China, and no one is, this is the takeaway that I think is weird. They're close to a deal. Remember, every time they met, they had the framework for a deal. There's been no deal. And then Trump comes out off a call that he has that went horribly bad, okay, with Taiwan and rare earth and a number of different things that the market ignored, okay? And then he comes out and goes, "Oh, I'm going to visit Beijing sometime next year." So what does that mean to you? We're not having any deal until he visits Beijing in April of next year?
But on the flip side, all of the mantra from the bear side has been absolutely wrong. It has been even more wrong this year. That tariffs are going to be bad for the economy. They're going to cause inflation. All of these
Eric,
things.
let me
Never.
ask you a question. I don't know where you went to college, okay? But and if you did go to college, but I would say that if you went to college, tariffs are not good. Okay? Basically, a tariff is a tax on goods, okay? So
That's conventional. That's a
whether the
conventional thought.
out.
That's a conventional thought that the market seems to have just either. You can't just say they're ignoring it, right? You have to kind of, if you say they're ignoring it, then you believe the market is completely inefficient and doesn't take anything into account. That's
Oh,
not the
come
case.
on. I think you put up the headline before. Jane Street, Citadel, Virtu are setting record profits. How do you think that can happen?
Dude,
Do you
how
think
much
that
are they
time
making?
out,
They're
time
making
out,
what, 23
time out? You're
billion
not letting me
in
speak as usual.
the
Okay.
market.
Let me talk. Okay. How can that happen in a bear market or a market going down? How are they going to have record profits in a market going down? Just explain to me how that can happen. Can't. You know how they make a record profit, Eric? When everybody is churning it up and trading and making money, or, think they're making money. That's the only way it can happen. So the bottom line is they're in it to have the market go higher. They have the ability, with retail flow being whatever it is, to push markets higher. And it makes a lot of sense. So,
Well, how much do you think Jane Street and Citadel made on trading revenue?
I don't know, 25 billion, some crazy
Exactly.
number
Pretty
each.
close. Right, pretty close. So you think them
No, I think they
extracting.
made more. I think they made it all on front running flow.
But you
All
know
of it.
what my question is? I mean, it's just 25 billion. You think that's really rigging the market to the upside all year long?
Eric,
Just
Eric,
just extracting a mere 25 billion. I mean, every day you're telling me the
how is
MOCs
that a mere 25 billion? How is that a mere 25 billion? That's one firm. There's 25 or 50 of these firms out there. They're not making 25 billion, they're making 3 billion. Hudson River, 7 billion. This 8 billion. Yeah, I think they're making very high hundreds of billions, if not trillions on. And how are they making it, Eric? Tell me. They're not putting market bets on. They're basically going in front of flow. I mean, come on, you know that. I mean, they're not. Listen, if you let me ask you, um could you go basically listen, I make money more than I lose money, okay? But it's maybe 60-40 in a great year, 70-30, or whatever. I don't make money every day. Is that trading if you're making money every day? Where Virtu has an entire full year and not having a losing trading day? Explain to me how that happens. How can that happen?
No, you become a toll booth operator in a way.
But that's the market. And as long as cars are going over your bridge, you're going to make a lot of money. And as long as everything stays stable, okay, and the market continues to go higher, everything is good. Let me ask you this. Today's a regular trading day, right? It doesn't feel, you know, any different than most trading days. Market's up. Okay. If we were 8% off the high right now, you saw it in Bitcoin, 37% off the high. The thing couldn't rally. I was on this podcast going, this is crazy. It's 6 days. We're sitting down here. I don't understand it. It makes no sense. And then basically they washed out everybody. That trade did what real trading should do. We were bearish on the market. The market collapsed, which may happen next year, hopefully in the S&P market, and get high volatility and good trading. Okay. But in Bitcoin, it collapsed 37%. Then the market bottomed out. It sat for 6 days, dude. It wouldn't rally for 6 days. You know why? Because it was liquidating everyone out. Everyone liquidated out. It ran 12% from 8,100 to 9,200. And then you walk in on Monday morning and it's down 8,000. Okay. Yesterday it stabilized again, but it was down 8,000 yesterday from the high to the low. That's a trading market. That's a market that we would never be able to see in our equity market. Never. It could never happen, Eric. Never, because the toll booth would shut down, the operators wouldn't be trading, and it would be a big problem. And the revenue that's being generated is being generated from trading. Listen, I worked at Spear Leads and Kellogg for 11 years. You know how many losing months we had in 11 years? How many losing months did we have in 11 years?
In 11 years?
11
My,
years,
I don't know.
right?
Tell me. I don't know.
Zero, zero, not a losing month in 11 years. Pretty good business, huh? Then that business sold for $8 billion in 2000, which is like 80 billion today or more. Okay. For a business that we basically were specialists on the floor. You know, come on. You don't think that's an advantage? Goldman thought it was an advantage. They bought us for 9 billion. So all I'm saying to you is, as long as everything is okay, and as long as today somehow they have buyers coming into the market, they're able to clip coupons, taking very little to no risk. And I find it to be a little bit unfair, to the players out there, that they get to
I
see
don't
my.
know. I thought that market makers don't make money in a down market. Is that what you said? I don't know. I feel like they do anyway. Like in
They,
2022.
they may make money, but to make money, you are taking much more risk. I would say professional traders, okay, make more money in markets that are volatile and uncertain. A lot more money. Volatility expands, prices expand. You have a lot more leeway, and the things don't make sense. I know we're getting close to the opening, so I want to kind of wrap in here. But it was funny. I was talking to someone yesterday, and we were talking about the bond market. I don't, you're in the bond market, but the bond, especially on the 30-year yesterday, had one of its worst days of the year. Okay, no one even knows that. If you asked anyone on this podcast, they probably don't even look at it. Okay, and then I said to my friend, I go, you know what? It's very funny. If the bond, which was down 110 went down 2 points, which is rather large, right? And significant, would that even take the market down? And my answer is no. Like today, let me ask you this. You're a trader, okay? And we're going to end on this and then I'll let you finish it out. But I'm asking you as a trader today, market's up 20 handles and spoos, 100 NASDAQ, just the regular. Okay. What are you looking at today to make a trading decision? I'm just curious. Like, are you looking at bonds? Are you looking at gold? Are you looking at crude? Are you looking at the dollar? Are you looking at foreign markets? What are you looking at to decide
I know what you
whether or
want
not
to
the
say. I
market
know where you're
is
going. You want to make it like all I look at is price, but you know
no,
what?
dude,
What
I'm
do you
not doing that. I'm just asking you a question.
if you want to know, I mean, yesterday I'm looking at what the rotation looked like, which I thought was very bullish. The market was rotating into very high quality names, even within tech. So
Well,
I'm
how
looking
is
at
it bullish? The S&P closed down 35 on the day.
that's okay. So that actually, you're just looking at price. I'm looking at what's going on underneath.
But what if
And
that
so
but time out?
even
What if it
though
changes
hold up, even though price was down, I thought actually the
but what
rotation.
does that have to do with today? What if it changes today? Then what do you do?
Well,
I
I'll
don't
leave to the
understand.
next day.
I mean, yesterday I'm trading yesterday, and I think everyone
Looking at
watching the show
volatility, which
trading yesterday.
was low and
For
falling
yesterday.
all day. I'm looking at a lot of stuff that you look at, but like just a lot more data intensive. But these are all clues. There's stuff that happens that takes the market out of looking for indicators. There's stuff that can happen that blows it all out of the water. The clues that we're
Like
looking
what?
at.
Like what?
What do you
Like
mean, like what?
like you're saying the market set
A
up
headline will
yesterday.
destroy
Time
a
out. Time
headline. You've had it all year. We're looking
time
at
out.
clues.
Time
All of a
out.
sudden, you get a headline, and all the clues go out the window.
Obviously, I'm not talking about that. I'm saying I'm just asking for today. The S&P is up 20 handles for the day, 718, whatever, which they could reverse in 5 minutes if they wanted to. Okay. What I'm asking you, like for me as a trader, I always came in and I looked at the broad landscape. I looked at Europe, Asia, this market, that market, and I would formulate clues to what's going to happen in the market. And you want to know what it is now? It's the opposite. It's a false narrative. Okay. So it was like the other day when we went up 100 spool handles and 180 from the low, Nvidia was down 9, okay, with the S&P up on the day. So they're throwing wrinkles in all day, but like I'm looking at the market today, like what's getting the market so bullish? Like, or even that, I mean, it's not so bullish, but why
I'll
would
tell you what. I'll tell you what. I'll tell you what. The biggest question I want to answer when I get to the trading desk is there or is there not a virus in the market? Something that will make the market sick today. Right? So this is what we do. We take a look at different things. Like today, you look up at do you see any virus in the market that would make it completely reverse course from where it is right now? I don't.
how would you know? Because you just literally said a minute ago there could be a headline, there could be anything. The bottom line is no nobody knows. But all I'm trying to point out, and then I want to wrap because we're 7 minutes to the opening and I want to get everybody ready for the opening, is this is not a regular trading market, okay, that we've seen even with algos over the last bunch of years. Now they throw false clues at you all day. So, like, you're looking at Nvidia being weak today or strong today is irrelevant. Okay. I mean, usually when it's strong, the market rallies, but when it's weak, okay, and the market is holding in, as soon as that rallies a little, they take the market. But my point is that I don't see any clue in the market other than, like you said, pricing that has us up 18 handles. When I woke up this morning, we were up 5 handles, which these aren't big moves. But the bottom line is now we're up 18 and everybody feels calm and confident, right? But what happens if we're negative on the day? How come every time we go negative, the market feels like it's going to crash? What's the reason? Seriously. It doesn't feel that way?
I think all year you had that element. Yeah. And I think the reason is because everybody keeps looking, like you said, for price action. This year was an interesting year because like usually you'll have people buying the low. You'll see volume when you have a real low. People are going to buy the low. Hedge funds come in, buy the low. You see real volume at the low. You never saw that this year. You would have a rally like you go back to May, end of April. They were all buying the highs, and that continued all year. Where the market, you see it in the volume, the market would look for higher prices for confirmation. So they would all like just buy the high. They're all in at a high price point, and all it takes is a little dip to get them nervous. That's why it would feel like a crash every single
Right,
time.
but why does 20 handles do that to the market? 20 handles on a $7,000 instrument. It just doesn't, it seems like things are very jaded. That's all I could say as a trader. But anyway, we're really late. I want to wish everyone a great trading day. Keep an eye on gold. It rallied back here. I like it as a short for a trade. Bonds, again, if it comes in a little more, maybe look to buy that. Crude oil back in the 58 handle. If it gets a little lower, I like that. And, I like Nvidia selling some upside Nvidia calls after the move.
Give,
Anyway, I wish you
give
luck.
the folks your opinion on silver. They're asking your opinion on
I
silver.
don't know. I leave silver to you. It's the devil's metal. So I'm going to leave it to you.
Well, then my suggestion: don't touch it unless you're doing SLV defined risk option trades.
All right. Well, listen, we wish everyone luck today. Enjoy the trading day and peace.